welcome back to our show.
Hi, guys. Hi, I'm JodieJo, team lead at the Sycamore team with 𝐸XQ Realty.
And I'm Karen Oxner, UMortgage and 𝐤𝐭
Yes, hi again.
Hi again.
Welcome back. Well, some other questions. Actually, this is a big topic. I've had clients come to me and say, oh my gosh, I read the notes on the remarks of this home. I'm so excited about it because it says that it's an assumable rate at 3%, and I can get into a home with that assumable rate mortgage. What does that mean? And that is a whole new can of options. I would love for you to touch on that.
So of course, as interest rates become, such a hot topic, and interest rates are higher today than they have been in the past few years, people are looking for different and creative ways to kind of proceed in this new market. So we've talked about, temporary buy downs and, all kinds of different tools and things that we can use to help our clients. And assuming somebody else's mortgage on a sale transaction that might have a lower interest rate has become, a hot topic of today. So yes, there are assumable loans. There are definitely loans out there that can be assumed by a new purchaser, but it is not as simple and easy as one might make it sound. Often, what's the saying? If it sounds too good to be true, it often is.
It is.
So there's a lot of things that go along with that. So say, for example, a veteran purchased a home, they got a 3% interest rate. They did a $250,000 loan on a $250,000 purchase. Fast forward 4 years, they want to sell that home. Now say they owe, $235,000 and they want to sell that home for $400,000, right? Mm-hmm. So in theory, a VA loan could be an assumable loan, meaning a new purchaser could come in, assume that underlying lien and purchase the property. However, not only do they have to get approval from, the loan servicer and approval from the underlying investor to make that happen, they have to make sure that they are eligible to assume that loan. They have to be a veteran. They have to, they have to go through that process. They also have to bridge the gap between what they are purchasing the house for and the underlying loan. So if the underlying loan in our example was $235,000 and they're purchasing for $400,000, even if you do assume that underlying loan, how do you bridge that gap between that point and this point? So there's a lot that goes into actually making that happen successfully. I haven't seen it a ton, so sounds great, and sometimes it's too good to be true. So the short answer is yes, there are potentially opportunities to assume someone's loan. The much longer and more realistic answer is there's a lot that goes into it. So make sure you're chatting with a mortgage professional, make sure your agent and your loan officer know the process, are familiar with it, can help you navigate that. And if that isn't something that would work, make sure you're going through the steps to get properly pre-approved so that you can find a way to purchase that home another way.
So a couple of things that I heard you say are assumable mortgages or assumable interest rate mortgages. Are they really just for VA?
Yeah, I mean, it depends on what the documentation and the loan paperwork says. And again, so you'd want to make sure that you got your original paperwork when you closed your loan and read anything within it that talks about assumptions, loan assumptions. So VA are just kind of some of the more popularized ones, but typically most other loans are typically not assumable.
So if on the chance that you've got a VA loan and a VA borrower or buyer that wants to assume that loan, you're saying that they would have to make up that difference, so they couldn't go and get another mortgage to make up that difference.
The terms of the original loan don't change. So you couldn't then get a $400,000 VA loan by assuming somebody's $235,000 VA loan. So no, you cannot do that.
Okay, and you can't have two first mortgages.
Nope. So we'd have to figure out a way around that. So it's real. There's a lot of complexities that go into that, and they're typically not successful. So definitely contact your professional loan officer and get the details before you assume that you can assume a loan. See what I did there?
Yes. And what I'm seeing truly is there's advertisements that some realtors, some listing agents that will say this is an assumable mortgage at X amount interest rate, and they haven't necessarily had their sellers look through their mortgage paperwork to verify that, nor do they know the steps that it may take in order to do something like that.
Or even, I've even seen situations where it's not where they're actually legally and properly actually assuming a loan. They're just taking over the payments. And that is a whole another scary and alarming thing that just has, that I would not do, because what if the buyer doesn't make the payments? Then your credit is ruined. So there are just a lot of complexities there, and I get it. People don't want to lose these super low interest rate loans, but there is so much more that goes into it that's just not as cut and dry as, oh great, you know, Sally had a 3% interest rate and now I do too. Nope, doesn't work like that.
Yeah, well, so that's fascinating. You've got people that are potentially taking over a loan, but the loan remains in the seller's name. So where's the verification or the proof or the incentive for a seller to do something like that and risk their credit?
Totally. Well, the risk involved, it's just messy and lots of liability there in a situation like that. So not something I would personally ever feel comfortable entertaining.
Yeah.
As sweet as that may sound.
Sometimes things are too good to be true.
That's right. You're not too good to be true.
Thank you, Jodie. All those sweets.